Hello and welcome. This is what the market looked like for that of silver early in September, or that at the top, September 4th, as the price action getting up to about 16 and 19 and 2/3. And of course, being that of a top, it started to go down. And price action comes down at this point $19.30. Well, that represented a level of Fibonacci, not a big one, but one nonetheless. And then the market at this point, we can see, comes back to it after this failed rally. And it doesn't do much in here, but it says a lot in how it was correcting within this for quite some time. This is the 4-minute time frame. And then as it breaks that resistance, a concise drop. The next key level of Fibonacci comes in at 1909. And the market continues on after supporting there, hits resistance of what was before support, and breaking through this, another one of those moves lower. The next level is 1876. So I'll just put that line in now, because these are numbers you know after calculate, or well, you can know, I should say, because it's high divided by low, and they never change until you make a new high or a new low. And right now, of course, with that previous high, well, they're obviously not changing. So we'll see how well the 1876 works, because, well, before, when you have it working the way it did, support it almost perfectly, have a resistance, support it a bit, then fast move right down to it, resist that last one. And then when you break through this, I guess we're going to that next level, but notice the situation here. Now, maybe this found support, that this was Fibonacci below that. Maybe the next one's 1846. Well, I'll put the next line in right now. And you can't see it because it's below this 1850 number. So no, this didn't work out to any Fibonacci support. But we're seeing resistance. That's one of the things you can see amongst it, which either indicates resistance for a move to what that next level is, or that failed breakdown, which should have a fast move to 19. Spoiler, it was not that. Okay, well, you're resisting it, you're resisting. Okay, well, Fibonacci's doing its thing, and it stops going down, and, well, technically did, with a monstrous pierce below. And then it just leaves. It's almost like it's stuck with glue, and now the glue's worn off. Another way of looking at it. But we still don't see that line. It hasn't went there yet. There, okay, there it is. Now it hits 1823. So I might as well put the next one in, just in case it happens to go down again. And there we have it. You come down to this level, it stops going down from it, has a bounce. Obviously, another one of the spots where it resists its last prior level of key support. And then after breaking it, I've said this before, look for that area to be resistance. See, that's where you look at it. Right here. This is where you're looking at it when you look for it to be resistance. But, well, what do we see? I mean, this is those huge typical failed breakdowns these markets so typically often show. You can call these patterns double bottoms, and then you can state facts over the probable target areas are. I mean, they're different every time. This, you can say, well, I want to give me the length of the this to here, so that means we should have went to 1837, but, and then you can say it goes to this Fibonacci, and it did actually. Did it go higher? No, but it hit it. But there's that failed breakdown, and just again, it's like the glue was stuck to it, as it previous was just moments ago. And then it hits this line like that again. We're pretty much perfect at it. And now we're resisting it here. So failed move again. Okay, it was a failed breakdown. And when you have a move like that, that's generally not a good thing because you have to hold when you go up like this. Okay, so what if you go down after losing that glue? I guess you could state it as, but and it had the same place where it had its glue edits before, same board if you will, same ceiling, and but if it higher loaded anywhere, even if it came down to the line at 1823 at its low and had a huge correction, which it did, but it was even huger, of course, since it went not only went to the low but even below it. And then you resist it in here on the September 8th session. Don't make a new low. I mean, yeah, you make it, but not really. You match it before. But you also in here, this little group of work or time from September 8th, 2232 to 436 was resisting this general area of support in here. So, or one floor lower is another way of putting it. And then from that failed move, you just lost momentum. And now, okay, this level of support is forgotten after it broke down below that level. And back to it again. And it didn't go down that line. That I put a new support line in, but another small failed breakout, getting above that line, and that's where we stand right now. And interestingly, 1740, that was the next line. And I actually stated that level uh, on Friday's video based on this exact Fibonacci mathematics. And it's just luck that they keep on working like this. I don't know if there's any other way of saying it. How are these levels calculated? Well, simple. What I did, I put the low in here, that's 1430. And for the low, let me show the chart for the actual move. We're talking these lows and these highs. And when we go back to the spreadsheet, it is high divided by low, which equals 1.374125874. And I typed in 0.618 here. And then each one of these is equal to the previous number up top, which is in this case is 618, multiply 0.618. So then 38 point these numbers multiply 618 and so on and so forth. And 38 point, and I subtracted this by 1 because, well, 23.6% on the way I just have to I need the mathematical formulation to calculate it to 76 to get this number. And therefore, the first Fibonacci level at 1930 represented on the way up this, but we're working Fibonacci down 5.57097% move. Or we'll just say 5.57%. And then the 9% move comes in at 1909. The 14.6, almost 14.6%, 1879. This is when they start to become more serious as they're using long-term ranges. And these like 9% and 5% stuff for short-term variables. But now these low levels here become long-term. So the 1740 is the longer, more of a longer term, and also short term, of course, as well, with all of these key levels. 1615 is that next one. So if 1740 is unable to hold or shows any signs of being breached or defeated, then I'd be looking for a move to a little over 16 as a next area of possible support. But as it goes for today, I do like to see on Sunday as these markets gap up to start the week off, but I was expecting to see something like this when the price came down here, where we would go down to 1740-ish. I thought it'd pierce below, and I mean, really? I mean, what was this low? 17.38. I mean, okay. It pierced below it, so good call. If this move that we see here, which is making it to the 18 average on the hourly, but more importantly, has sustained a significant rally, has gapped open, it's 8:06 p.m. Eastern, so for 2 hours, has been able to hold the original rally from the start of the week, the statement it's making it's going to $18.23. Now it just seems it's just been luck. So whether I mean it's like flipping a coin. Sometimes you're right, sometimes you're wrong. But whether it would make it up to that level and work and oh my goodness, it's yeah, it was definitely a key level because of what it's been doing. Sort of like all of these tops and bottoms that have been hitting along the way. But you're supposed to get these bounces. And on a failed situation, because it's normal to bounce up here and bounce, and it could go up to like 1780, 1790, and lower high, either one of these two highs if you want to, because that's that's what they do in bear markets. But you can always work the Fibonacci from the lows of 1940s to, or excuse me, 1738 actually, $17.38 to whatever the high happens to be. And that's part of the game. And when it fails, meaning you see, and another way of doing it is eyesight. Like, what's a good amount? Somewhere around here. If you see somewhat lower but noticeably higher than the low, that market's showing weakness and it looks like it's going to falter. Well, that tells you that you are having a failed rally. And just like all the times I showed before, where we bounce perfectly on a level, come up, and then boom, down it goes big. That's the exact situation you're looking at. Low shots of having this thing. Uh, well, we have low shots of finding support. Yeah, that's exactly what I'm trying to say. I'm thinking long term as I'm doing this is where I'm moving my next segment, which is why I stuttered really badly there. So let me just go to what I'm thinking now. And with this market having the 18 average as or the price action within the 18 average, having a move above it, it's first time it's been noticeably really at all above the 18 average of highs because the only other time was here July of 16, but well since October of 2012. So early on in this decade. Well, this quarter comes to a completion in 2 weeks, and then the final quarter of the decade thereafter that. It's just a small scream. Oh, we finally heard you. And I've had a lot of people on this channel stating, "Wake me up when we get to $50 silver." You know what? It's been a long time, and I don't know how much longer it will take because it comes down to this big. Oh, it comes down to this even larger when I look at this on the monthly chart. And there's one question that I've answered the same for quite some time that I now answer differently. And that is how much time do I have? For a while. And that time frame was really everywhere in here. So really from the middle of 2017, middle of uh, that point up until just now this summer, 2 years. You ask me how much time do you have to. There's no signs of silver doing anything right now on a bullish level. I think you have lots of time if you want to wait for financial situations or if you want to try to take a chance to buy the silver later. I think you're in decent shape. Or I think we still have a decent amount of time before it's going to get really expensive. Now, I don't know how much time we have because the price action still is in this sideways consolidation range when it comes down to it. When you're in range bound, and just because you're at the lower end of the range doesn't mean it's time to be very bearish, as is the same case being bullish at the upper end of a range. And the thing about range is you're just developing big supports and resistance, and we've already had this level develop pretty good, but is it one more shot because we hit it here, and now we're just getting there now for really, really a third time in this area since we lifted off on there. So now what we're going to do is we're going to take a look at the Fibonacci from this high to this low. The area down here, well, that would represent where the 61.8% level was, and that was 514. Supported twice in the early stages, practically perfectly, and then congested within from 1989 through 2003. 1229, the 61.8% level, showing something that I find really interesting because it's a irregularity, appears above. As this level didn't really quite come back down to it on the more recent time. An oddity. And that's why when I say it's only luck within these Fibonacci's, that you probably, if it was just putting lines in random spots, should be seeing a good fair share of looks like this. I just don't. I know you can't see the line in here, but we can see in the early stages how these two lines, well, worked magnificently. This is in here, and ever since it lifted off up until now. And maybe we do still hit it, though. Maybe this isn't the real move, and it comes back down, pierces below, and that's the bottom. You, that's something still not quite yet to discount. But if we have seen the bottom, and they're in, well, that would be really interesting and odd. Now, we got the 76.4% level that's above this here. That's just a little over 20. I think it's 20.1. Let me double check it. Rather that of 2110. And the highs were 21 and a third. 2136, I remember. I think I had 2144. I remember 36, but either way, pretty much an exact hit in here. And another one of these spots, just like we see in the short term, where it didn't support it, but it resisted this area, and it did so on two different occasions. As it did so in the first time it got there, as it obviously didn't find any price or even time support there. Price support is where we, just like we've seen at this the 40-cent handle, where it just rose high. That's where you have a good price bounce to the opposite direction. And a time would be where, well, that's your support for a few periods where you don't go up too much, you just go sideways. And well, it does do that, but it really resists it more than anything. So it's between congestion and resistance at that level. So I would deem it resisting. It did stop going down, and then of course it resisted again amongst this level. And getting above this 21 low level into this area, that's what really it needs for this market to really have what it needs to be free, because overall within these levels, it's telling us that we've had the low, the big highs, the huge correctionary mode via both time and price, and extreme on both and extreme on price. And then a very good rally back to where it came from. And well, now we're having most certainly not a large price comparison or price correction in comparison to the first time it fell from there. As far as its time so far, well, it's got a long ways to go to have it worse than this, because, well, from the top to the bottom, 1980 to 2003, nearly 1/4 years. But from where we stand now, from the top to the bottom, and I'm counting this as the bottom where it breaks out from, not this bottom in here. But from 2011 top, right now we're at 2019. Because I would count, if it breaks out from here, I'm going to count the bottom breakout period as April 2019, at least on this chart time frame right here. And even maybe down at this low here. Either way, it's been the better part of this decade, 8 years or so. And in the situation of coming back to this level, whenever you have the low, the high, and then you have like the good correction where it's not as deep in price, not as big in time like this, and then you most likely have a big move to this previous resistance. So that's another way of saying that on the break of 21, don't be surprised if it gets from 21 to 50 after that, and it can still go wild because of this exact setup. Thank you for tuning in. Have yourself a great day. Bye-bye.